So what is Section 24 mortgage interest relief cap? How does it affect your properties? How does it affect your net worth? Check out this video as I go through the details of Section 24 and how you can legally mitigate it. This is a lot of data, but what I want to show you here is that all the numbers are the same. It's not a mistake. I purposely did this way, but it's just showing you all the tax years. So 1617, just as I think, is before Section 24 was introduced. 1718 all the way through is when it's been phased through. And then the year 2020, 21 is when Section 24 is in full effect. You'll notice none of the numbers are any different. The real profit is still remaining at £3,000. So why am I showing you? Well, what I'm going to do is I tried to do this highlighter pen and it really screwed up. What I want to show you is the real profit across this hasn't changed. That is going to be staying static. Now, what you'll notice that the disallowed interest is showing you here. So 2016-17 is where I'm going to be focusing my efforts today versus 2021 when the mortgage interest relief cap is in full effect, which is this tax year coming up now. You'll notice that the taxable paper profit, which is not real profit, goes from £3,000 to this huge amount of £26,000, which is a lot of money, I have to say, based on the tax that you'll have to pay. Most of you have just fallen off your seat because these numbers are very, very scary indeed. But going on from that, what I want to show you, you do get a misnomer out there is that you don't get any tax relief at all. And that's not true. You do get a tax reducer, and it's 20% of whatever the mortgage interest cost is. So if you are paying £1,000 more worth of mortgage interest, you get a £200 reducer against your tax liability. It's not the full £400 if you're a high rate taxpayer. So you're getting half the tax relief in effect. But what you'll notice is that the net tax on this particular situation is now, and I'll just talk about high rate taxpayers because that's really who it's affecting in the majority of cases. So net tax, you'll notice as a high rate taxpayer, you're paying a shed load more tax compared to 1,200 in 2016-17 versus 5,800 in 2021. It could, in fact, show lots of people that they are paying more tax than the profits they are indeed making. And if you recall from the previous slide, the amount of profit you was making was £3,000, but you're paying £5,800 in taxation. That tells you a lot. Now, typically, this is going to affect people that are in London that have big properties or flats and very expensive. And the mortgage is very hyped up as well. Maybe they've got residential rates or they've got a mortgage buy-to-let. But the fact that they've now vacated that property and now they are having to get clobbered with this Section 24 pretty much would say that they're in trouble. So you are going to see lots and lots and lots of landlords in London with problems on their hands. And there is no real solution for them as such. But we'll go into exactly. This slide really, all of this is doing is just showing you that the tax on profit is 40%, obviously as a high rate taxpayer in 16-17 before Section 24 came into play. Then you've got 40% tax liability. That's pretty obvious. But if you move into 2020-21, you'll notice that the amount of tax now is 193% of the actual profits. That's scary. And we have had one particular client, I've never seen it higher than this, with 155%. Okay, so that was a real case story. And then obviously they'll be paying more tax in the future as well. So what did they do? Well, stay tuned and I'll go through some of the Section 24 mitigation factors. Right now, and interestingly enough, I've just noticed that this graph probably needs to be updated given the recent changes because that blip is obviously now lower than the 0.25%. But at some point in the future, Section 24 will be a compound issue, because you're paying out mortgage interest, but you don't get the tax relief. And mortgage interest at some point in the future, whether it's 5 or 10 years time now, will go up. Maybe it won't be this 7% that we saw here, but it's certainly going to be going up at some point in the future. And as such, who is going to be making more money from residential property investments if you have a mortgage? Is it the banks and HMRC, or is it you? Well, my bet it's on HMRC and the banks making more money from the time you spend investing in residential property investments. So it does bring to a question in my mind is, why have a mortgage? Because if you don't get the tax relief, and interest rates will go up at some point in the future. Right now, you've got to get a mortgage. They're so cheap. You may as well leverage. But once the interest rates go up to 5-6%, I'm kind of saying, well, maybe that's the time to pay down those mortgages and benefit from Section 24, because it's not going to affect you anyway. So do have a think about that as we go through. I did say, what will the interest rate be in 2021, 22? I think we know now it's less than what it was before. So it is worth taking advantage of that scenario. Let's talk about mitigation factors and things that you need to think about in the future with your property strategy going forwards. I think what I would be saying straight away is you could be buying in commercial properties. As we mentioned, warehouses are going to be huge in the next few years. Storage, self-storage or business storage, huge in the future. Why? Well, because we're going to more online shopping. So places like Amazon are going to require more space. Now, I appreciate they may buy their own stuff, but you are going to find small independent online distribution centers that need to have a warehouse or rent a space in a warehouse. That could be a real good killer. Holiday let service accommodation, not right now, because the coronavirus is shutting them all down, as we can see. But in the future, maybe that could be more popular than residential. Section 24 doesn't affect holiday lets. You've got rent to rents. Now, who's paying the mortgage interest? Not you if you're doing a rent to rent, Jay, but the landlord is. So Section 24 won't affect you because you don't have to offset the mortgage interest, but the landlord may if they have a mortgage. So you do need to speak to them and say to them, well, hey, have you got a mortgage on your property? Now, they may say, well, you're a bit nosy, aren't you? And that's fine. You might just need to apologize, but explain to them about Section 24, because I rather suspect that 60% of the population of landlords still do not know what's this Section 24 is all about. So explaining the situation may put them in a position where they sell the property. And rather than sell the property to a stranger, why don't they sell the property to you? And you agree a deal to take this tax burden away from them. Open the conversation and see what opportunities may exist for you. Repayment of mortgages, as I mentioned before, people used to use mortgages for capital growth, leveraging of debt. Now, leveraging of debt still very much applies, especially with coronavirus and the reduction of the Bank of England interest rates. And if you're on a variable rate, you really are going to be quite happy. But in the future, when interest rates are higher, then maybe paying off those mortgages. Going back to my point, actually, the whole premise of using a buy-to-let mortgage was leverage. So you could take, instead of investing, let's say, £100,000 into one property, you could get 4 properties and invest £25,000 at a time, which comes back to your 100,000. But instead of just having one unencumbered property, you've got 4 buy-to-let properties. And if capital appreciation takes off, then you are clearly going to benefit from using leveraging of debt. But the question is, how is property values going to go up more than it is already? We're not in the 2000s or 1990s where property prices were skyrocketing. I think we've had that, and we will get that again at some point in the future. But has anyone got a crystal ball, especially in these times, to say when property values will double in 10 years? In Nottingham, property prices have not doubled for at least 15, 20 years. So really using debt as a way to get capital growth doesn't exist as much as it used to. So do bear in mind that there are a lot of courses still saying use buy-to-let mortgages, but then Section 24 impacts you so severely, and you kind of think, but that seems to be an old strategy that people are still spinning to sell courses, but may not be relevant anymore. So you do need to be careful when you're getting into it. Losses on your property portfolio. You may have losses on your property portfolio right now. You're thinking that Section 24 is not affecting you because your losses are just being eroded, but they're being eroded very, very quickly. And once those losses have been utilized on your self-assessment tax return, then unfortunately, you're going to have a huge hike of tax that you was not prepared for. And it could in itself give you a financial headache because you didn't think it was going to happen to you. You didn't understand the magnitude of it. And that's why for many years now, we've been doing a forecast for our clients to say, this is your tax position now, and this is your tax position after Section 24 is going to be in full flow. And we're doing that for this year again for all of our clients. But if you're not doing that, how do you know how Section 24 is going to affect you? Make sure that you work with your accountants and tax advisors to build that forecast for you. Using limited companies, like me, like many people that I've just seen on this chat already, are using limited companies because Section 24 does not affect you. And I used to say that the limited company interest rates for mortgages were higher, maybe 1.5%. Well, actually, I'm seeing such competitive numbers now of 3.5% inside of a limited company. I mean, boy, that is cheap. And I will suspect that that market will be even more competitive in the future. So do bear that in mind as we go through. Well, why not book a call with me, Simon Misiewicz, your Finance Tax Director, for at least an hour to understand how we can help you grow your business without paying the tax.